Good afternoon, everyone, and welcome to Stock Market Today. Ali Corum and Justin Nielsen here with a look at today's action where we saw a pretty stunning reversal for the NASDAQ composite in particular, with the tech-heavy index finishing in positive territory today, Justin.
Yeah, I certainly didn't see that coming when we were taking a look at things earlier today. But after a rough start, we had a lot of stocks up, and we'll go ahead and take a look at, in particular, the healthcare ETF, the Sector Spider Healthcare ETF, that's XLV, also Seagate Technologies, STX, and ended up with a coal stock, ARCH.
All right, let's do that. But first, let's take a look at those major indexes. So here is the NASDAQ composite on a slightly delayed chart. But the NASDAQ finished up about 7 points, less than 0.1% for the day. But that was after being down, some 2+% in the early going, down below that 200-day line. So that acting as a bit of a support level for the moment. We have the Dow Jones down 0.5% today, the Russell down about 0.7%, and the S&P down about 0.1%. So in what could have been potentially a vertical violation today, Justin, seeing the NASDAQ close in the green gets rid of that possibility for the time being. But walk us through what implications today's action has.
Yeah, definitely. I wouldn't say getting rid of the possibility just for today, as you noted, because
Right.
look, this was a pretty remarkable comeback. Just if you could use your imagination, looking at this chart, remember at one point it was at the lows of the day, down more than 2%, and that was just looking like things were coming down hard, and that's that vertical violation that you mentioned. And usually what happens with the vertical violation, where you get relentless selling day after day, including some big days like a 3% drop or more, which we did see last Wednesday. That's when you get to a little bit more trouble in the indexes, and you don't normally see the bounces that we've seen, where it's a pullback of, let's say, 5%, and then the buy on the dip mentality comes in and supports everything. But now the way things closed was very different. We got this support at the 200-day moving average line for the index, for the NASDAQ composite. And as you noted, we were able to actually close just slightly in the blue, it looked like, by the end of the day. So that does postpone that possibility of a vertical violation. And it does suggest that there is some support level, that the buy on the dip mentality may still be there. However, we should note that the advances versus decliners, that was still a 2-to-1 ratio in favor of the decliners. So it's not like that there was broad participation here in this move. If you look at the Sector Spider ETFs, there's 11 of those, and most of them were down. The only ones that were up were XLV, the healthcare, which we'll talk about in a little bit, and XLK, the tech one, just brought itself up to above positive by the end of the day. So everything else was down. So this was not a great day, even though it doesn't look too bad on the surface.
Yeah. So, Justin, what about investors out there who are feeling like they're kicking themselves for selling at what turned out to be the day's lows?
It's going to happen. I can't tell you how many times I've sold at the day's lows. The trick here is to not do panic selling. That's where you're selling a lot of things at once, where you feel like you have to do this all or nothing. I was selling a little bit at the lows today, I'll be honest with you, but it was only a little bit. I had done a lot of selling last week, a little bit at a time, a little bit at a time. So I wasn't taking as big of a hit today. And so I didn't feel like I had to get rid of everything. But that more gradual in or out is what will usually save you from selling everything at the low.
Yes, taking profits into strength.
Absolutely.
When we start seeing
Hmm.
signs that the waters are getting more choppy, instead of today being the first day that you start to react, that is a very good point. And even then, trying to not make a knee-jerk reaction, all or nothing decisions. But Yeah, we'll have to see what tomorrow brings, because one thing's for sure, this is a very uh, a time of heightened volatility.
It is, and you have to just be aware that, look, that 200-day line, we've got a line in the sand right now. I mean, we undercut the previous lows. Scott St. Clair on IBD Live today was talking about those marked lows. So you see the 14,860, and this is really kind of the first time in a long time that we've knocked out two of those marked lows at one foul swoop here. So that is kind of a decisive character change in this market, suggesting maybe there's more trouble to come. But with the index getting that support of the 200-day moving average line, we'll just have to see if it holds there. If it doesn't, then your next stop is that 14,181, that low that we saw back at the beginning of October.
Mm-hmm. Great technical levels to watch there, Justin. A quick check in on the S&P 500 as well before we move on. So after support of the 50-day at the end of last week, coming below that level, but probably closing right around that level today, maybe slightly below it. We also have the Dow as well, coming down to its 50-day line in today's session. So a bit of support there as well for that index. And let's take a look at small caps as well. IWM tracking the Russell 2000, holding above recent lows, but down for the day. And we also want to take a look at how growth fared today by looking at the FFTY ETF. So hitting its lowest levels in really quite a while, Justin, intraday.
Yeah, and you can see that the high growth names, those have been the ones that have been hit the hardest. That's why the relative strength on this one is so low. Just kind of taking a different tack on this, what's interesting is that the IBD breakout stock index, BOUT, that one's held up so much better. And part of that is because in this latest kind of shift from growth, this one actually was seeing breakouts in things like REITs and stuff like that. And so this one kind of shifted over there a little bit quicker, and that's why you don't see as much destruction on this index.
Interesting little fact there. Okay, well, you mentioned the sector ETFs, Justin. So now let's take a look at XLV reversing higher for the day. So stopping a 6 or 7 session slide up about 1.1% for the day, and finding support right where you'd like to see it, not only at a prior buy point, but also that 50-day.
Yeah, so I mean, this is just as you said, this is exactly where you would want it to find support. And while it's not great to see something round trip gains, the gains were very slight here. This wasn't double-digit gains. That's when we start getting a little bit more concerned, when you see double-digit gains reverse themselves and you round trip those. Now, this is an ETF. You're going to get some shorter moves. Less volatility because you have that diversification among stocks, even though you're in the same sector. But it bears mentioning that we have the JP Morgan Healthcare Conference that's going on. And Allison Gatlin is going to be reporting on that. She's going to have a lot of stories on that this week. That's going to go through Thursday. And sometimes you will see news coming out that will definitely affect those stocks in here. Today, for instance, one of the big winners in the XLV ETF was Moderna, mRNA. They were talking about their pipeline. And look, this is not just about the COVID-19 vaccines. This is a pipeline that they've got with 40 different things in the works, and they were reporting on that. So there's a lot of things going on. Pfizer is getting into the CRISPR gene editing technology, and so PFE, that one was also showing strength today. So definitely take a look at Allison Gatlin's reporting as that news comes out throughout this week, because that bears watching. While the XLV is one of the stronger sectors. And, again, besides XLK, this was the only one that was up, and it was up well over 1%.
Yeah, a key sector to watch this week, no doubt. And now let's also take a look at STX Seagate Technologies in the data storage industry group, showing a lot of strength with support at its 21-day line along its run over the last couple of months, including today, another touch of the 21-day line, providing a boost for the stock, reversing higher over 3%.
Yes, and again, when you see that there was so much destruction going on across the board here, and this one is up 3%, that's pretty impressive, and that's going to show up in that relative strength. So those are the stocks that I'm looking at. What's holding up the best? And even if I'm not going to be throwing money at some of these, it's
Hmm.
still worth noting who is holding up the best and who is actually maybe able to make progress even during this downturn. And one of the things that you've got to notice, and we probably should have mentioned this, if you pull up 0TNX, the 10-year Treasury yield, that's something that's been spiking up quite a bit with all of the news of the Fed and what they're going to do with the tapering and what they're going to do with that assets on the balance sheet, and with rate hikes, 3 expected this year. A lot of people are watching that 10-year Treasury, and that is having an effect on growth. But
Hmm.
going back to STX, one of the things that STX has going for it is if you look at its PE ratio, not something we normally look at, but that PE ratio is 16. That's less than the S&P 500. And so that could be one of the things that's getting a little bit more attention for these lower PE stocks when that 10-year Treasury yield is rising so much. Because if you're richly valued, then guess what?
Hmm.
You're getting a big discount, put slapped onto you because of that rise in the 10-year yield.
Yeah, it sounds like it's one of the factors that we should be taking a look at when looking for potential watch list stocks in this kind of environment. And let's also take a look at Arch, ARCH, in the energy coal group, which I think in 2021, Justin, a lot of us were surprised to see coal in the top number one, or even the top five, top 10 groups for as long as it was,
Yeah.
because it's not typically the names that we traffic in. But with that being said, it's still in the top group, so it's still showing that group strength. And we have Arch here setting up with a new base and really has been resisting the recent downdraft.
Yeah, and there again, it gets back to that relative strength point. Things that are able to resist that downdraft. I mean, you look at this, and it's kind of like what downturn? There's nothing that's showing up on this chart that suggests any trouble. So this is just a nice little cup with handle. You could also look at an early entry of just putting the line across the tops there. So this is something that's setting up. And look, there's stuff that's going on in the industry here. So sometimes when you're looking at these commodity stocks, you have to look at what's happening in the industry. And we've got supply chain issues in China that's jumping the price of coal. You've got natural gas supply issues going on in Europe. That's also leading to the higher prices for coal. And now that's thermal coal. Now, what Arch Resources does is more of the metallurgical, and that's useful for steel making. So we were looking
Mhm.
at a lot of steel stocks last week, and this is something that looks to be rebounding. And so this is a higher price and higher margin coal, when you go with the met coal, and that's what Arch Resources does. So we made this the stock of the day today. Jillian Rich wrote a nice story on that and can kind of give you a little bit more of the details of what's going on in this industry and specifically with Arch Resources. But certainly looking at the technical action, you've got a cup with handle here with it right there at a buy point, and so far showing very strong action.
So tomorrow, Justin, I mean, there are many different scenarios that could play out, but it seems like we're at a critical juncture where it's going to require investors to remain very flexible. If we see a negative scenario play out tomorrow, it seems like more selling, raising cash would be warranted. But what if we see this upside reversal continue? Would it be uh, in investors' best interest to put some money to work, or are there so many headwinds out there that warrant caution at this time?
There are headwinds, and it does warrant caution, but you have to be ready for anything. If I went by what headlines were out there, how much worry I had, I'd probably never invest. There are times where you just have to kind of look and say, hey, is there merchandise out there? Are there setups out there? And go slow. either with the
Mhm.
selling or with the buying. You don't want to plunge either way. And if there is some strong action tomorrow, then it starts kind of giving you a sense, hey, maybe this was another one of those buy on the dip situations. So you can put some money to work. If that starts rising, hey, then you put some more money to work because the market is giving you feedback. The market is telling you that your decisions are right. However, if you find that you're putting some money out there and the stocks that you put your money on, they're not moving, they're not making progress, well, then that's telling you something too. So I do think you have to be careful because there could just be one of these dead cat bounces, as we like to say, where
Yeah.
it's temporary and it's kind of like that last chance to get out before something really bad happens. So you have to be prepared for that scenario. But we've seen a lot of buy on the dips here lately, and this could be another one of those. So it does make sense to be prepared for that scenario as well.
All right. Great thoughts there, Justin. Thank you so much for that. And thanks to everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. And we also have a special webinar, I believe, as well. So make sure you're checking out all the details on our webinar section of our website for that too. Thanks for watching. We'll see you here tomorrow.